Hi everyone, it's Mike Novak coming at you from the Novak Real Estate Team. Today we've got Sean Antonius from American Pacific Mortgage with us. He's a trusted friend of mine. He's also our go-to lender that we send a lot of clients over to. Sean, we get a lot of questions asked from clients that we're working with every day, and I just thought I'd ask you a few questions today that maybe some of these people have running around their head. Maybe they're afraid to ask you or me, but these are things that we hear every day.
Yep.
And that maybe someone's wondering about. So the first question I've got for you, Sean, should I use my bank to get a mortgage? I've got my checking and savings over at Bank of America or BECU.
Right.
The logical thing is to use them for my mortgage, right?
Yes. That makes sense. I get this question a lot, and I get where people are coming from with that, but there's a couple of realities that people don't realize when they're talking about a depository bank, an actual brick and mortar bank that you would go into. Those people exist to open checking and savings accounts, give credit cards, lines of credit, home equity lines. Mortgage is somewhere between 5th and 10th on their priority list. So as a result of that, they typically don't have the infrastructure to do them well. It's typically a painful process. That's not across the board, but I hear a lot of people getting loans with those types of banks who it's a painful process.
Sure.
Number two, to piggyback that, most people don't realize this, and in fact, most realtors don't realize this. A lender who does mortgages for a depository bank, such as some of those that you named, they actually aren't required to get licensed, which is kind of an interesting.
It's like a teller that's doing the loan?
No, they're mortgage people, but they don't have to go through a class and get their own, pass their test and get their own license. Their license is under the flag of the national bank. So that's an interesting thing. You may be dealing with somebody who's less experienced.
Gotcha.
And so.
So out of the different kind of banks, mortgage brokers, mortgage bankers, are those the three main categories?
Yeah.
What are just kind of like the quick differences between those?
A depository bank is pretty much exactly what I just explained. Those people, somebody sitting at the depository
the
bank.
Bank of America,
yes,
or
correct.
BECU.
Wells Fargo, Chase, those guys.
Sure.
And then a broker is typically somebody who has multiple relationships with lots of banks, and they don't have their own internal processing, typically don't have their own internal underwriting. They outsource all of that to whoever they place your loan with. Again, you're setting yourself up for an incredibly painful process there. And then there's people like me who are mortgage specific. I work for a mortgage bank, so that's all we do. We don't open checking and savings accounts. We don't have brick and mortar locations all over the place. All we do is mortgage. Our infrastructure is specifically tailored to do that and do it well.
Got it. So all you do is mortgage loans.
Correct.
You don't do car loans. You don't do checking and savings account. 100% mortgage.
Correct.
That's your bread and butter. That's
Correct.
all that you do.
Yep.
Got it. Okay. Awesome. And so, why do some banks quote rates that are so much lower than others, Sean? Like kind of piggybacking on that first question.
Yep.
Hey, U.S. Bank's gonna give me a 3.25%,
Yep.
Interest rate or whatever it is. How are they able to do that? And what's going on there when they give me just the super low rate that seems like it's so much lower than everyone else?
Yes. So what they're doing typically is quoting you a rate to get you in the door that has an origination point, possibly more than 1 point built in. I say point is 1 percentage point of the loan amount. What typically happens when they quote you a low rate, they're also quoting you without really explicitly telling you your closing costs are going to be considerably higher to get that low rate. And that's to get you in the door, get you all excited about a low rate. And there's nothing that they're doing there that's proprietary to them. I can also offer very low rates. What we typically start at is the rate that's closest to zero out-of-pocket money, and then go from there with buy-down points.
Okay, yeah, I think that's something that really very few people understand. Even a lot of realtors don't understand this.
Right.
That interest rates can be bought down.
Yes.
And they can be bought up.
Yes.
Too. Do you want to just touch on that for just a second?
Yep.
On what
So
that means?
this is incredibly complex, and most people don't get this. But really briefly, a rate table can go up and down. As your rate goes down, your closing costs go up. Every rate has a price associated with it. So it works in reverse as well. If you want to take a higher rate, the bank's going to say thank you very much, and we'll actually give you money back toward closing, and your closing costs would be less.
Gotcha.
So,
so the two main things then to look at would be the interest rate and the closing costs. You're saying those are the two kind of manipulators,
yes.
right? Like
And
if one goes down, the other one's going to go up.
Correct. And the majority of people look only at rate. Okay. And that's the only consideration, and they don't factor into the equation kind of what the rate is going to cost them.
Gotcha. And how would someone know what their closing cost would be?
Ask.
So
Yeah.
a closing cost estimate?
Yeah.
Okay.
Upfront loan estimate.
Gotcha.
A reputable lender should be able to give you multiple options up front. Hey, here's 3 ideas. This is going to cost this, this, and this. Here's your monthly payment. Here's your rate. Here's your closing costs. What do you think? What fits into your comfortability and your lifestyle?
Gotcha.
That kind of stuff.
Okay. My next question for you, I don't want to ask you to pull out a crystal ball or anything like that, of course. But, where are interest rates going in the next year? I get asked by our clients all the time, hey, I'm thinking about maybe waiting a year. Is there any cost for waiting, or where do you think the interest rates are going to go? I know that you have no control over current events or economic disasters, but short of that, do you have any insights on where rates could be next year?
Rates are tied to market, which is tied to news, world politics, reactionary type stuff and movements like that. When you look at all the prominent economists that we read and we follow on a daily basis, what bond markets are doing, what the Fed has come out and said they're going to do over the next several years, all of that ties into our speculation. Again, this is not, hard and fast rule, but all signs point to rates continuing to rise over the next year to 2 years.
Okay.
How much? Who knows? Again, it's all speculation, but all economists, all kind of litmus tests that we have in the industry to look at that and speculate, at least, everybody says this is probably what's going to happen.
They're going to go up.
They're probably going to continue to rise.
Okay.
Yeah.
You think maybe half a point? I mean, how far do you think they're going to go up? If you were just going to guess.
That would be tough. If I were to guess, maybe a point over the next 2 years.
A point, okay. I'm pinning him down for you guys.
Yeah, that could be totally. I probably shouldn't even go on the record and say that,
Well,
but
I just want to get your opinion on it. And, I know that, I know you have no crystal ball, but I was just curious what your personal opinion.
We do market research. We follow these guys who are very reputable. One guy in particular has been awarded like the #1 economist for like crystal ball type stuff like that.
Yeah.
Barry Habib, I follow him. Everybody says they're going to continue to rise.
Gotcha.
Yeah.
Okay. And then the next question I had for you, Sean, and I get this a lot, and I know you get this one quite a bit too, is, I'm thinking about buying a home, but do I need to work on my credit in order to get a home loan?
Yeah.
Is that something that, how do you respond to someone when they say that, and what's the answer to that question?
Oftentimes, no. When I get that question a lot, people are always assuming my credit needs to be better than it is to buy a house, right? Oftentimes, no. We have a lot of products that go down to pretty low credit scores, and it really just starts with the person, the client making an application and just kind of getting a really good idea of their whole financial landscape.
Sure.
Credit score and trade lines are just one piece to the puzzle.
So what is the credit score I have to get a loan, minimum?
580 right now
580.
with us, yeah.
I get asked that question every single day.
Yeah,
so that's great for everyone.
and those are normal loans. They're not like special loans. They're not going to destroy you and triple the rate and punish you for. There are a couple of quirks and a couple of things that you have to kind of qualify for that low of a credit score, but it's not undoable for the majority of people.
Sure.
So,
and I know that you and I have worked together with a couple of clients that had some credit issues. And do you want to just maybe explain the process you went through? I know you've got a credit score simulator tool you use, and we've seen some powerful results for people that they were not going to be able to buy a home, or they maybe have been told no.
Correct.
And you were able to open that door for them.
Correct.
Can you kind of share some insights on how that works?
Yeah, it's taking the one extra step that most lenders don't do. They look at your qualification and they kind of say yes or no. That's not everybody, but most.
Yeah.
And what I like to do is push a little harder. So I'll take your entire credit report. It could be single, it could be a married couple, and look at the whole landscape. And then, like you said, we have this simulator that we kind of plug everything into, and I can move stuff around. Right. So I can play with this thing, move this balance to this utilization, pay off this small little collection you didn't even know was there, a couple $100, $1,000, something like that. And by doing these 2 or 3 little kind of credit homework pieces, we then submit what's called a rapid rescore. We will get your score jumped to whatever it needs to be. after you do that homework and prove that you've done it and show letters of, new balances, that kind of stuff,
Sure.
then we will do the rescore. It's typically 3 to 5 business days.
Wow, that's fast.
And that way you don't have to wait a month or two for those statements and those trade lines to recycle.
Gotcha. So you're able to basically run different scenarios, like
Right.
if I pay off my credit card, if I get a collection account off, maybe that's incorrect. Or something like that.
Yeah, I have half a dozen people this year alone who've come to me who've said, hey, this other guy said I can't do anything. I pull their credit. I tweak a few things. They do their homework. We rescore them, and they're in a home in a matter of a few weeks.
Gotcha. That's super cool. Next question I have for you, and we get this one every day also.
Yep.
How do I buy a home with little or nothing down? You know, I've got $2,000 in my account. You hear that all the time, right? How do you buy a home, or can you even buy a home with that little bit of money down?
Yep. So there's several ways to do that. The easiest way is what we call a gift from a family member, and you can actually get a straight up, FHA or conventional. That's a really easy way to do it, assuming people have family who, have
Want to help?
Money lying around in a 401k or something like that.
Absolutely.
Number two, USDA is a really good way to go. VA. Both of those are zero down. They have their own, qualifications. Obviously, VA is specifically for veterans and active military, and then
USDA is what?
USDA is kind of a rural program.
Okay.
It's zero down. It's meant to kind of augment density in rural populations. Around here, there's actually a dividing line because we have a dense population. So across the east side, the dividing line is typically Highway 9,
Gotcha.
anything east of that. And then it goes up to about Arlington and cuts over to Smoky Point. So anything kind of north and east of that density marker, we can do USDA loans on too.
It's a great loan, right?
Great loan.
Awesome.
Yeah.
Okay.
Oh, one other, sorry. We also have the state bond loan. The state has a program through the Washington State Housing and Finance Commission. The lender, myself or whoever you talk to, has to be specifically licensed to do these loans with them. But what they do is a down payment assistance program where they loan you the down payment as a silent second mortgage, and it sits there payment-free, interest-free until the first mortgage is taken care of.
It's a pretty awesome program.
Very cool.
I know a lot of our clients have loved that
We've
program.
done several of those this year, and everybody's been really, really happy with it.
Cool. So there you go, guys. 4 different ways to buy a home with nothing down.
Yeah.
VA, USDA, gift from family, and the down payment assistance program.
Yep.
I got one last question for you.
Sure.
So if I'm a renter right now, how do I get into home ownership? Like, what's the first step? Because I just don't, maybe I don't know what to do, or I don't know any realtors. I don't know any mortgage people.
Yeah.
What do I do? Where do I start?
You could start by doing some online research. You're going to get a million different answers to a million different questions that way. My advice is to reach out. You, your wife Rachel, myself, we're nice people. We're approachable people. It doesn't lock you into using us. It doesn't commit you to anything. Just get an idea. It doesn't cost anything. It's really easy to just kind of call one of us or email one of us, and we'll just kind of start piecing together that financial landscape, move some pieces around. If it doesn't make sense for you to buy immediately, we're also here to kind of coach you up, So, hey, do this and this and this over the next 2 to 3 months, 2 to 3 weeks, and then you're in a position to comfortably buy a home. And most people, it's just the phone call that's holding them up. It's their perception of what a low credit score might be, or I had
the pain of getting pre-approved.
Yeah, I had a bankruptcy a couple years ago. I'm sure this and that. It's really simple as just reaching out.
Gotcha.
And if, like I said, if we can't do something right now, I'm going to coach you up and tell you what we can do over the next several weeks and months to get you there.
Awesome. Well, thanks so much, Sean, for answering those questions. I know those are going to be a lot of help for our clients out there and people that are following on our Facebook page. So again, it's Mike Novak from the Novak Real Estate Team with Sean Antonius from American Pacific Mortgage. He's located down in Bothell. He's just a phone call away or a Facebook message away. Go have coffee with this guy and learn about mortgages.